welcome back to the Road Forward podcast. Today we have Tracy Lang from HigginBotham. And, since I've had my struggles with insurance in my own carrier company, this was a really, really good one where I got to ask all of the difficult questions. So I hope you enjoy.
So we'll just jump right into it. So,
Sure.
So how long have you been selling insurance?
Since 2000.
Okay, so 22 years.
22 years.
It's a long time. I'm 29,
yeah.
so basically.
Yeah. And all I've done is transportation insurance the whole time.
And that's it.
That's it.
And you are just like all 48 states or all 50 states almost?
All 48.
Okay.
Yeah.
Okay.
I would love to go to Hawaii, but no.
Right. Yeah, you need an excuse to travel out there. Got to set up the new office over there. Darn it.
Yeah.
Okay. And so just transportation.
Yes.
So like trucking, that kind of stuff.
Yeah, anything that requires wheels to make a living. So
Okay.
a lot of people think, for example, like I'm in an oil field. I'm hauling an oil field.
Okay.
Well, I'm an oil field operator. No, you're not. You're a trucking company that provides equipment and supplies to the oil field.
Okay. What do you see that like mistakes trucking companies make that causes their insurance? Like top three or something.
Top three, growing too fast and not expanding. There's safety and staff to be able to keep up with that growth.
Okay.
For example, maybe you start out with 10 trucks.
Okay.
And you're doing very well. You're doing a particular, maybe you're all dry van, and then you decide you want to start hauling some cars. And I'm going to go over here and haul some frac sand. I'm going to go over here and haul a little crude oil. Well, now you're starting to mix a lot of different operations. And that's just one example. That's a bad choice.
Okay.
Growing too fast, and I say too fast, growing too fast without a good structure and explanation that you can give to the insurance company or your agent to be able to give the insurance company, they're always going to be concerned because
Okay.
and their main concern is not that you're growing, is that can you keep up with the safety when you're growing?
Right.
Because now you've got, as most young operations start out, you're the general manager, you're the safety person, you're probably driving some, you're also doing some mechanic work, you're doing dispatch, you're doing payroll.
I was doing that.
So it's typical though.
Right, okay.
And now you've got to start at a different level. Now you've got to start dissecting what you're doing down the road, managing your cash flow, really looking like some of these speakers, like not only your hourly net or whatever, but what am I really making? Am I ahead of the curve? Am I behind the curve? Am I looking at it every week? And in some instances, you should be looking at it every day, so you know how to basically adjust those financials.
Okay.
That's one of the biggest things. The other thing I think, from my perspective, when companies are starting out, and I get it, they can't really all get new equipment, but sometimes they buy such old equipment that their maintenance scores are just out the top as far as the basics.
But like if it's old, like maybe it doesn't have airbags, stuff like that doesn't make a big difference, right? No. So it's just specifically that that then affects their DOT score, which then gives them a bad score because they can't. It's always breaking down, which DOT loves because they write them up.
Yeah, because there's a thing we all call BLT. And it's not bacon, lettuce, and
Oh,
tomato.
okay, I was going to say.
It's brake lights and tires. You see that all the time as far as the major things that people are getting tagged on DOT in the maintenance score section.
Brakes, lights, and tires.
Yeah.
Okay.
And the other thing that people are really getting tagged with is personal conveyance. There are a lot of carriers out there that if DOT wanted to make a lot of money could go in and look at that personal conveyance violations, and that's a hefty fine per violation.
Right. I had a somewhat strict no personal conveyance unless approved by management.
Good.
So I had very few issues with that. But I am well aware that a lot of people abuse that.
Yep.
And so that could be a problem. So, but if my safety score, like I had violations and my safety score was for the vehicle, it was below the national average. So the national average is 21% or something like that, out of service percentage. Mine was at 16. Driver national average score was, I believe, 6.9, and mine was at like 7 something, I think. Right, so a little bit higher on the driver, but lower on the vehicles.
Out of service?
Yes, out of service percentage, right?
Okay.
So, so when I went to go renew the quote, they gave me like almost double. almost double. So I was paying about $1,400 per month per truck.
Okay.
And they raised it to 22 and some change.
Is this when you were with Progressive?
Yeah, the quote was from Progressive.
Okay.
So I was going from
Note to everybody on Progressive.
Right.
It's the one place that I will not go and quote for anybody.
Why is that?
Because Progressive, at least in Texas, they don't have a set standard. So, and what I mean by that as far as pricing, I could have written you at $10,000 a year per truck. You change trucks, I'm talking strictly liability. You change trucks, or you change drivers, or you do different trailers or anything, it doesn't just affect one truck that you changed. It affects the entire quote, month to month. So,
and that's Progressive here in Texas, right?
In Texas, yeah. In Oklahoma and Arkansas, that's not the case. What they quote you per truck is what they can charge you per, but they haven't got that in Texas yet. And it's hard, you know, especially for somebody new.
Right.
I mean, you got to budget for this, and if you don't know what your month-to-month costs are, how can you budget?
Right.
Because it's like, you know, okay, I'm going to pick for this. What's this number going to be?
Okay, so and that's just like, hey, you know, we got rid of this vehicle and we got this one instead. Similar make and model, doesn't matter. It's like a rewrite for the whole policy all over again.
Yep. And your drivers, same. I mean, it could be no vehicle change, just driver change can do that. As I call it, it's the butterfly effect with Progressive.
Wow. So like driver quits, maybe he's been on here, maybe he's been with the company for a while, driver quits, you train a new driver, get him in there. They rewrite the whole policy basically when you swap those drivers.
It's all algorithm. There's nobody, and so this algorithm just looks at everything.
But still, it basically requotes the whole thing all over again.
And there's a few little nuances with Progressive that you can do that will get better pricing. Now they have a camera program that you can better pricing. If you provide them with your Social Security number when you're applying and stuff, then they give you a little financial credit as well. So they can look up your credit rating. But there are a few little things you get better pricing on.
Right, and I've heard some of those too. Because I didn't have them in the ELD for like hard brakes or anything. Like I had the ELD and I had the dash cam, but I didn't set that up. And but again, it was just the price was unreasonable. And I asked them like line by line, what are you guys charging me for? And like 90% of it was that $1 million liability.
Sure.
So even if I got rid of everything, like comprehensive coverage on the trucks, uninsured, whatever, just get rid of everything, cargo, all of it, it would only save me 10%. Because just that $1 million liability is just super expensive.
It's a major cost, and you know, and of course the deductible affects that. You know,
I had a $1,000 deductible. I think I just heard you say a $25,000 deductible. Is that what companies are doing? They're just raising the deductible that
larger
high?
companies are. Yeah, I mean larger companies, and they define that. Companies 50 trucks or more, not 50 to 100, maybe 50 to 200. You know, they're not buying first dollar coverage. They're buying $25,000, $50,000, maybe even $100,000 if they're 200, 250 trucks deductible per accident. Because, you know, it's in the end, I hate even saying this because I don't like the term, having skin in the game is what the insurance companies like to call it. And I'm like, no, that's basically saying risk transference, that's what that is. So I'm transferring this amount of risk to the company, and we will be either our best friend or our worst enemy.
Right, it's definitely not skin in the game. It's like at the end of the day, I'm signing for the trucks, I'm signing for the land, I'm signing to like put the drivers in there. It's like you can't say I don't have any skin in the game when all of it is on me anyways, right?
Yeah, but you get it. I mean, you're a little more cautious if you have an accident and it's just $1,000. Then you know the safety culture. Maybe it's not that important if I only have to pay $1,000.
Right.
If I have to come up with 25 grand, hey, you better be doing this safe.
Right, that's true. That's a good point. But when I asked them, because I was working with someone, and I asked them, like, what would be the price difference between a $1,000 deductible and $2,500?
Not much.
It wasn't much.
No, especially if you're not having frequency of claims, then the deductible change is really not going to help you.
Right.
When you have some frequency, not horrendous frequency, that's been happening over the last 3 years.
What would be considered some frequency? Once every 6 months?
Yeah, let's say you're having 3 or 4 claims for a 15 truck account that are not severe, but you're having 3 or 4 claims a year, maybe 5.
And what's not severe? Under 10% of the...
Yeah, let's say, you know, not severe. Maybe they're $5,000, $10,000, $15,000 claims, stuff that's under, you know, that's fairly small amounts. then that's not as big an issue, particularly if that's just comp and collision. Now, if those are third-party wrecks where you got somebody else involved, then it starts raising the flag even more.
Right.
Because, then they're putting that $1 million at risk out there.
Right.
Because they're, 15 trucks, let's say, and you're charged 20,000, that's 300K. They pay out $1 million, they're still upside down. I won't take that investment any day of the week.
Right, exactly. Yeah, and I mean, most of our issues was like drivers would maybe over tighten the load and it would break and it would damage the load, and so then the load. Well, I only had one accident where a driver hit another vehicle, one, and that was the only one we did a claim on in 3 years.
Yeah.
So like the loss runs were good and the safety score was okay. It didn't make sense to me that the numbers didn't line up, but. You're saying they don't like, I think I mentioned earlier, is that they don't like hot shots. They don't like non-CDL. Like if it's not an 18-wheeler, they don't work with it. They don't like working with it.
They don't like it as well. And we've, several new insurance companies are coming into Texas, and, they will do it with the hot shots as part of it, but they really want that to be less than 20% of the operation.
Dang.
And it's,
I only had one semi out of the 17,
yeah.
So it was the reverse.
And I can't argue with them. I mean, it's, Great West Casualty, Century, AmTrust, National Interstate, HDVI, just to name a few, and there's a bunch. All those companies don't like that. It's based on statistics. It's not that they're just somebody in the background said, hey, we don't want to do this. They have really looked at the numbers, And all these companies, for the most part, I mean, this is what they do. They do transportation insurance, and it's not just for trucking per se. I mean, they do it for all the different verticals, hazmat carriers, the heavy haul carriers, loggers, et cetera.
So they're not dumb. Like when they're quoting you high, it's because it's a lot of risk.
Yeah, and particularly if you're new, you get it. I mean, it's kind of like, I got my pilot's license, so a few years back, so, I worked for a large insurance company. They wanted all the information on all their pilots that were not flying their planes, but were flying private planes.
Okay.
And so you get it that, oh, well, somebody's got 10 years experience flying a plane. They're probably safer than Tracy with 100 hours. But my argument,
got to get those hours up, Tracy. Okay.
And I agree with that. That's experience.
You're working too much. Okay. You need to go fly more.
It costs money.
Okay, man, it makes sense. And so, any recommendations for because the numbers were, I was watching a recent article over the past year. 2021 was a crazy trucking year, and per month, 20,000 new motor carriers were activating their authority a month, and the average normally is about 10,000 a month. So this past year, double the amount of carriers were getting into trucking.
Sure.
Versus before. And so it's like any recommendations, some of that is changing, by the way, because the loads have kind of started to slow down, and so a lot of carriers are going out of business now. But any recommendations for new carriers that are just starting to get into it? Have a good credit score? Try to take advantage of every savings?
Yeah, I mean, first off, I would say find you a partner, whoever that is. If it's HigginBotham, whoever, go find you and interview them. Find you a good expert.
Okay.
Don't go to mom and pop shop in Tyler that can write you a policy, but that's not their nuance. That's not what they do. It's not what they feed their families with.
Okay. Is that your company name?
HigginBotham.
Okay.
Yes. HigginBotham Insurance.
Okay, so you want to find just don't find a general insurance person. Find a specialist.
Find a specialist.
Okay.
It's kind of like, do you want to go to the family practice doctor when you have a heart attack, or would you rather go to a cardiologist?
Yeah, cardiologist. Right. Okay, that's a good advice. Okay, second thing.
Yeah. So go to them, kind of get your business plan together. Check all your costs. What's it going to cost for tires, fuel, driver turnover, all that sort of stuff, if you're going to be other than just your own one truck. But still, you need to know all that.
Okay.
Set up a financial plan for you to move forward with, because if you don't have that, it's just like throwing spitballs against the wall. You don't know what your results are going to be.
And will insurance ask for that plan when you write it up, or they just don't care?
They don't care, but the fact that your agent knows that, the thing that a lot of agents do is that they just want data. how many trucks do you have? What's your IFTA? You know, as new, you're not going to know all this, but you're going to estimate. But if you're an established business, you know, here's your equipment list, driver's list, your IFTAs, your financials, your loss runs, and they put all that together depending on their expertise with that, you know, and you do an evaluation of all that. Are you growing? Are you expanding? Are you more profitable, less profitable? And then they'll just send that in with the applications to the insurance companies to get you a quote. Well, think about it.
And then the agent, because you provided all this information up front and you seem knowledgeable, like you actually care about your business, you're not trying to just get in there and fly by night. But so the agent would then try to fight for you on your behalf or something because you're trying to do a good job?
Yeah, because, you know, the agents then, if they're doing their job, for whatever markets will write your business, they will do proposals to all, or applications to all those different companies and get responses back. And then they can use that information to try to get you the best deal. Because maybe this company over here, they have a better partnership with, or this one, or maybe there's 2 or 3 of them.
Right.
Then, I mean, they work for you.
Right.
That's their job. So just putting the data out there, though, is not going to get you the best numbers. They need to know your company culture. They need to be able to tell the story, who's who, what's the background. Is it a good safety culture? What are you doing to really make it different than other companies to be safer? What are you doing with the data? You know, if you've got cameras and all that, who's looking at it? When are they looking at it? You know, what actually is the structure of your company? All that gets you the best pricing.
Okay. And so you give this to your agent, and then he can then explain that to the underwriters or whatever,
Absolutely.
and say, hey, look, here's the systems in place they have for footage review when there's a violation or something on
And
the
here's
footage.
the action we take, you know.
Right, okay.
And it even comes down to different type of camera vendors. You know, I heard somebody say today that they had to keep trucking cameras, and I'm like, oh my goodness.
Those aren't very good.
Not very good.
That's what I had.
kind of the worst camera that you could buy, personally,
Right.
opinion.
But they plugged right into the ELD, so it's...
So does Samsara.
Okay, that's true. That's true.
And they've got AI built in. So you can get immediate feedback on drivers. You can actually try to make them better with that. You know, and they can be coached with that, even where they are. So that if they're following too closely, they bust a red light, they're not watching when traffic's coming on to interstate, all those different things. That's something that's valuable. You know, sometimes older drivers are hard to coach. That would be me.
Right, yeah.
I've
been driving for 30 years.
You don't tell me how to do this. I don't like all that technology. You're not
Right.
putting a camera here and watching me.
Right,
know.
okay, that's fair.
You know.
But still, you want to have those policies in place so that you can explain to your driver, hey, here's how we're doing it, because that helps us on your insurance and that helps us stay
That
in
helps
business.
us pay you more. That keeps you employed. We can give you more bonuses because you're safer. And you know what? We'll even incentivize you to do all that because if you're safer, then that helps us. It helps us all collectively as a company. And then I can give you bonuses for different things. And there are plenty of insurance carriers out there that are starting to do that as part of their package.
Right. Okay. And so that would be the second, maybe third thing, which is make sure you have your plan written out and make sure you focus on safety. Any other suggestions for newer carriers that are just starting to get in?
You know, talk with a lot of other people that you know, network, get with other carriers and see what their mistakes have been as they've gone through it. You know, as a new carrier, there's very, very few people that are going to write you. You're pretty much Progressive, NICO, or Berkshire Hathaway, which is still NICO.
Right.
Navigators, you know, and that's about it. So, you know, a lot of carriers are paying $18,000, $20,000. I heard a guy speaking here today is paying $18,000 per unit.
Right.
And
I mean, 1,400 times 10 is 14,000 plus 3. So I was paying 17,000 per unit.
Yeah. I don't know how people make it with that.
Right.
I don't. I look at the numbers and I'm like, well, you know, I hope
But it's not just small companies, because I mean, before, like, big companies go out of business pretty often too, and oftentimes they cite insurance, but I don't know if that's correct. But still, like, insurance plays a big role even if you do have 100 trucks, right?
Yeah, and you really, my background before I got into this was in the hospital, right?
Okay.
And before I got into insurance, I went and become a certified financial planner. So you've got to pay attention to financials. Cash flow is king.
Okay.
So, you know, as you get to where you're a bigger carrier and have more experience, then you want to find some insurance, this is my opinion, with an insurance company that will allow you to have a reporting form. Because most people will
So
charge
and you report that directly to the insurance?
You report that directly to the agent, which sends it to the insurance company. So example.
And so based on that, then they can say like, oh, you guys are doing good financially. You're less risk for us essentially,
Well,
right?
not,
Or
not
what is that
financial.
reporting?
So what we're doing is we're saying, okay, you've got this many trucks, you've got these drivers, and here's the value of your equipment. So every month you're turning a report. I ran this number of miles. Here are the values. And you've got a rate, whether it's 1%, 2% of your physical damage values that you multiply and you pay that percentage in. You've got a mileage rate for all your trucks. I ran this many miles. You multiply that times your 100 per 100 miles, and you pay that. So rather than having to finance something, or even pay directly as your business fluxes up and down with miles, then your premium fluxes up and down with miles on the liability portion.
Okay, so it's like insurance based on per
True
mile.
exposure.
Right.
True exposure.
Okay, and so some insurance companies do that when you're a bigger truck
when
company.
you're bigger, there's multiple. Protective, which I saw represented here, DMC, Great West, National Interstate, Century, HDVI, a bunch of them.
See, it's the small guys. It sucks being small. Okay,
It
the
does.
goal is to get from 1 to 100 real quick, and then from there the doors open up for you.
Well, even when you get up to 2025 and you get that 3 years in, then there's a number of carriers now that have opened up, and I'll mention one, and I'm not just, for all you people out there that are with other insurance companies I represent, but a new one that's coming to Texas to where if you drive well, you have to put their cameras and stuff in there. There's some approved vendors if you already have it, but share the feeds with them, the APIs, so they can get the data. And if you're doing a good job, you can get up to a 20% discount. So, and if you get better, your rates can go down month to month. It's not just an annual evaluation.
Okay.
And it's pretty unique. There's a lot of insure-tech companies coming out that are using that type of technology.
Right. Who was I talking to there? A really new one. They basically charge you. There's a small monthly premium, and they charge you for every day you're on the road.
Yeah.
And so I thought that was pretty neat too. But they didn't do hot shots either.
Yeah,
so.
Yeah. It's just like a lot of freight brokerages have problems that we insure too. That I've got $100,000 in coverage, but I've got a new person that wants me to find some carriers for their loads, and I need a $2 million coverage for this load.
And that's not GL. That's like actually
Cargo
cargo
coverage.
Oh, okay.
Well, you can't get the cargo coverage, but what they will do, this company, within about 15, 20 minutes, they'll give you a quote for the shipper. So it's shipper coverage. So you're really covering the property of the shipper, and you have to give them some details, where it's going and everything.
Right.
But for example, you might have a $750,000 load that's going from point A to point B.
Right.
And you might be able to get a quote for that for like, I don't know, $400
Right.
over what you're in.
And that's just a one-time for that
One-time
load,
deal.
and that's it.
Yeah. If
Right.
you went and got your insurance increased to $750,
Yeah.
that'd be a whole lot more than that.
Right, but I believe that one only covers everything above the 100,000 of your insurance, right? So your insurance,
Nope. It covers the whole thing.
the whole thing.
Because it's not cargo insurance. Oh. It's shipper coverage. It's a little different.
Okay,
And you
that
can
makes
do
sense.
it. We can do it in Canada. We can do it in the U.S. We can even do it internationally. We can do it on air, land, sea.
Shippers can get their freight covered.
Yep.
Whenever they're shipping something expensive.
Yep.
Okay. Wow. And any states in particular that just are much more reasonable for insurance? Because Texas does seem to be expensive for insurance, and I don't know why.
The further north you get, the less expensive. Now, I'm not talking about New Jersey or New York or anything, but I'm saying the middle,
Right, like straight north.
breadbasket area,
Right.
it's less expensive.
So those trucking companies in Iowa, they're winning.
I think so. But, they're still exposed to the same metrics, how long have you been in business? What are your loss runs like? What's your operation like? What's your culture? What's your driver turnover? All these different things that I'm leaving out of, several, but all of that affects it. How new is your equipment? How do you maintain your equipment? What are your basic scores? You have a green ISS score. All of that affects everything. Are you really looking at violations show up and going and DQing them to make sure they come off if they're really not yours or if they were inaccurate.
Yeah, I've tried to DQ a couple of violations, and it was always like, nope, that one's like.
Well, you
it's
got to
really
go
hard.
3 times.
Oh, you have to do it 3 times.
You have to do it 3 times.
See,
Because let's think about it. If you're going to DQ the first time, it goes to the officer that wrote the ticket.
Okay.
He ain't going to change his mind.
Right.
So the next time it goes to his supervisor, which may or may not, more likely not. And then the 3rd time it goes to the captain. And the captain will actually look into it.
But that's of course if you.
If it is something that's even DQable.
Okay, right. But
some things
but
you just can't.
oftentimes they like what I've noticed, generally speaking, is officers for the most part will cut you some slack on that they cannot verify. Right,
Sure.
like if it's a point of opinion, like, oh, I think this is kind of this strap is a little bit loose, and I think this strap is not super loose. They'll let that slide,
Sure.
but they'll write up for things that are abundantly obvious, like, hey, you don't have any brakes right now, right?
Yep.
It's clear as day that your taillight is out. It's clear as day, right? So it's like, so oftentimes they won't write you up for those little things, but like more often than not, they will write you up for things that are concrete.
That's correct. And that brings up a thought that I would tell everybody is that when your drivers are doing their DVRs, I would bet almost, I don't have the money with me, but I would bet pretty much any carrier that if you brought me your top 10 drivers and we put them all through, and I brought one of my risk consultants and let him, who's driven and knows everything about it, that nobody could do it right.
That's a fair bet.
And that's a lot of times, I mean, that's where you're getting all those maintenance violations. If the driver would do the DVR, which you can't do it in 5 minutes,
Right.
15 minutes minimum to do a proper DVR. I've videoed them.
Right.
That's the only reason I know that.
Right.
So 15 minutes, you got to stop somewhere down the road. Go ahead and do an abbreviated DVR when you get down the road. If you have something that you find later on that's wrong, then you can amend that on your logs and they'll give you some slack. But if you don't do that and you get found down the road, then you're going to get written up.
But even if a driver does put that on his logs, the violation doesn't go on the driver, it still goes on the carrier.
Yeah, but true.
And so what do you argue to the captain? Let's say, hey, my driver did say it and he was on his way to the shop, and you make something up that he's on his way? Like, what do you say to the captain to get the data queue to go through?
I don't know. That's not me. I don't do that. I'm a salesman. I know I've got a pretty good safety background and understanding of the operations, but I'm not going to say I'm all things to all people. That's beyond me.
Right. But still, at least if your drivers are paying attention and they are writing that, then from there, like, you could change operations in the company that maybe they do realize that, hey, we can fix these things quicker by implementing better systems. And so from there, maybe they will say, hey, I sent a message to the dispatch. Dispatch sent me to the shop. I'm literally on my way to the shop, and maybe that violation gets prevented to begin with.
That is
then
correct.
the officer goes like, oh, okay, great. You're on your way to the shop to fix it. Whatever, that's fine. And there's proof that dispatch did send you to the shop.
Yeah, and I know a lot of carriers out in West Texas that, I mean, they've been hit so hard because I mean, there's a lot of trucks out there, and they're looking for, they can make money daily.
Right.
And they've just come to the conclusion that we're not going to let anybody drive anywhere because you might have a problem and you want to go to the shop to get it repaired. They're just like, no, find the closest repair shop, go there. When it's fixed, you can call back and be dispatched. Till then, you're shut down.
Right. There was a recent article about West Texas that, like, they checked for CDLs, and 50% of the drivers didn't even have CDLs, and they were operating semis. And then they came back the next day, and again, 25% of the drivers didn't have their CDLs.
Yeah. And then there's the B1 drivers. You're only supposed to use B1 drivers for NAFTA, going to and from NAFTA, and you got some people that are like, oh, I'm hauling oil field equipment, surely I can hire a B1 driver. You can, you shouldn't, it's not legal.
And what is a B1 driver?
A Mexican driver that's here in the U.S. going from a free trade zone to a free trade zone.
Okay. So
that's all they're allowed to do.
Right. So just that and nothing else.
That's correct.
Wow. So you really need to stay on top of your stuff.
Yeah.
If you want to be even remotely any kind of decent sized carrier for the long run, you got to stay on top of your stuff.
You got to stay on top
Safety,
of your stuff.
Maintenance.
Get with a good agency, good agent, somebody that's not going to, just powder coat or lessen what's really important. Somebody to be honest with you, and help you try to develop that. A lot of insurance agents just want to sell you insurance.
Right. I mean, they get a commission, so the higher the premium, the better it is for them almost, right?
Yeah, well, I don't know that there's a lot necessarily with that attitude, but if you're not providing something other than insurance, if you're not helping people with their policies and procedures, their risk, helping drivers do the DVR, somebody can go out and help them do that. If you're in an oil field doing some training for H2S, things of that nature, that you've got somebody qualified to do it, that should all be something that they're providing. Because insurance is a commodity, right? All those other services are more personal, and you get to know the companies, and you can actually, customize something to help them out, because it's not one size fits all.
Right. Yeah, that makes sense. Like, selling the insurance shouldn't be the core business. It's just you actually trying to help and care about the carriers, that they do a good job and remain in business.
Correct.
As safely as possible.
Yeah, which will, I'll go and pull my safety consultant along with me and go see somebody even if I don't insure them, because the whole idea is to make the whole system safer.
Right, because you don't know, by giving that trucker a quote, maybe he's not ready, that then, there's an accident down the line, and that results in unfortunate news for the family involved. Wow. Well, Tracy, I appreciate you taking the time, man. Thank you so much. I was, like I said, I was a motor carrier, so I had my own questions about insurance. So this is really cool, and so I will definitely give it a. I know I some of the stuff you mentioned I didn't do super well, so I would definitely, if I do plan to renew down the road, I would definitely look into those things. I appreciate it.
Not a problem.
Awesome. That's going to be for this one.